So we got Claude, and she's asking, what exactly is insider trading? How do we safeguard ourselves from this?
Your first question, what exactly is insider trading? Well, insider trading is essentially the illegal practice of using access to confidential company information to make trades that are guaranteed to be beneficial. So it's basically when an investor has access to non-public information, and so he unfairly makes a trade based on this secret information. It's basically gaming the system. And functionally, it's cheating. It's actually compromising the fairness of the fair market. And so the punishment for insider trading, understandably, is pretty severe, actually. I've seen up to 20 years in prison you can get if it's egregious enough for committing insider trading. This is a really bad thing to do because it has a terribly negative impact on the money of potentially thousands or even millions of people. So it's similar to fraud in that way. So the punishment is pretty bad. And now I don't have hard and fast information on this, Claude, but I'll tell you this, sadly, I think illegal insider trading happens a lot. I'll bet there's a lot out there, probably many people who do this successfully, unfortunately. And it is unfortunate because it's a crime, it's illegal, it's unethical, it's immoral, it's wrong. But people do it, sadly. So that's kind of what insider trading is. I will say there is a legal form of insider trading where if you are an insider in a stock, if you own a certain amount of that stock that makes you an insider in it, you're allowed to trade that stock and you have access to information that's not privy to outsiders. But the SEC has specific guidelines that you have to follow in order for you to be able to do this in an ethical and legal way. So illegal insider trading absolutely is a sin. And this gets to your second question. It's cheating. It's cheating. It's dishonest. And we have to be on guard against this. And I think you're really wise, Claude, being on guard against this. It's a good thing, not only for the fact that you want to be protected legally and you don't want to go to jail, but also because you want to stand right before God. And I think that's really, really good. Now, here are a few safeguards for you to think about, Claude, as you're thinking, because your last question was kind of how do we be on guard against this? A couple things for you to do, actually, is first, ask the question if you are an insider at any position that you might hold. So my guess is most of you probably aren't. The chances of you being one would be if you work for a company and you have shares of that company, and maybe you're high up in that company and you have a good portion of shares in that company. Again, more than 10% of the company's equity securities. If that is the case, then you would be considered an insider at that company. And it doesn't mean, again, that you can't trade those company stocks, but it means if you do it, you have to follow the guidelines of the SEC in order for it to be what's called legal insider trading, essentially. Make sure that you understand the rules. Those rules are found on the SEC's website. A good safeguard is actually to follow our strategy, because our strategy is one of well diversification. So if you're not following a company that maybe you work for, you're a high level at, you should be well diversified enough that you don't need to worry about being overweighted in any one of these companies, which would make you free from the title of being an insider. So that would be a good thing. So if you follow our strategy, that's actually one way that you can safeguard from insider trading. The second thing to do, and really the third thing to do, I should say, because the second thing to do is make sure you understand the rules, and the rules that are laid out by the SEC, of course. The second thing to do, and this is really important for you, Claude, is always do what's right. And this is like basic level Christian worldview, humanity 101, but always do what's right. Let's say, for example, that you're not an insider at a company, but you've been tipped off. You've been tipped off by someone who's high up at a company. Maybe it's a friend with insider information. Maybe you got a buddy or a family member who's a boss at a company and they told you, hey, I know you own this stock. Something's about to go down the next couple of weeks. Maybe you should get out of it. What that person is doing actually is also illegal. That's called tipping. And that's part of insider trading. If you act on that tip-off, you are actually then becoming complicit in the insider trade. What you have to do there is you have to wait for that insider knowledge to become public before making that trade. Now, the tough part with that is it might cause you to lose money, but it is the right thing to do. It's very important to do what's right. It's very, very important to do what's right, even if that means that you'll lose money. Your Father in heaven is going to be pleased with this. And I know this sounds like no duh, of course. We're a Christian show. You're going to say do what's right. This is so important, though. It is so much better to know that God is pleased with you and that your conscience is clear and you have less money than to get a little bit of money, a little bit more money at a time, put yourself in legal trouble, and then also knowing that you have sinned before God knowingly. And you need to repent of that. So much better to walk in righteousness, be faithful to God, better than all the money in the world. So your ultimate safeguard against insider trading is doing what's right. So in short, Claude, I think this is a biblically responsible issue. I really do. I think it's an issue of biblical responsibility. You don't want to dishonor God with your money at all, and insider trading is dishonoring God with your money. So it's far better to have less, but also to have a clean conscience before God.